What's up, guys? Bill here. Welcome back to another Watchlist walkthrough. Today I'm going to be focusing mostly on SPY, but I got a couple other things at the end I'm going to talk about with you, some other tickers and stuff. Really nice day in the market today, to the long side, as you can't tell here, with SPY and this huge stick it put in. And a lot of setups that were coming into the day looking primed and ready for a bounce. Pretty much they all played out. And those are the types of days you want to take advantage of if you can, because, you know, a lot of times you get days like this up here for a week or so where there's not much range. It's tough to make a lot of money. So these kind of days like this, whether they're to the upside or to the downside, you want to try to take advantage. So I'm going to show you how I did that and how I would go about it again if, you know, these kind of conditions reproduce. Also, let's talk about what I was looking at coming into the day, right? So before we dive into the smaller time frames, here we were at the end of yesterday, and you can see that we're right up against this trend line here, and we're also just under the 20 EMA. Now, these EMAs have been very important to kind of give us a little bit of guidance on how our trend on the daily is looking. You can kind of see that they're pretty well respected. When the 9 used to give out here and there, the 20 would step in and help out. And then once we kind of lost that, that's when we really started to head down and make this little, downtrend, right? So it's important for bulls, if they want to get, make higher highs up through here, going into the end of the year, and maybe even all-time highs on SPY, they're going to want to reclaim these EMAs and hold. And they did today, right? So coming into the open, I was really looking for what kind of reaction we would get to SPY testing this trend line, testing this EMA. And this dash purple line, that's my previous day's closing price. I mark that every day. So let's dive into the smaller time frame windows here. So we open right around where we closed yesterday, and immediately a nice stick up, and a retest, and another stick up. Now, at this point, that's 3 candles into the day. We've obviously held our previous day's closing price. We're up over the 20 EMA on the daily now, which was sitting right around 443, so like right around here. We're up over that. We're 15 minutes into the day. We've set our 15-minute opening range here. Orange lines are your opening range. And, at this point, 15 minutes into the day, you're thinking, okay, well, it's off to a good start, right? One more candle. Now we're out of our opening range, and things are looking really good. So as an opening range trader, one thing I'm looking for right away is we get this close up here. I want a retest of this opening range high to get in to go long. We've got 4 straight green candles. We respected the previous day's closing price. We are up over that longer time frame resistance, that daily downtrend, that daily 20 EMA. And now I'm just waiting for a little bit of a pullback. So I'm not completely chasing this first leg up. And you can see that basically this trade would have been all you needed all day, and you could just kind of ride it the rest of the day. Now, there's one caveat that didn't make it that easy for me today. Right as this candle was forming, we were getting the JOLTS report dropped right at 7 Pacific time, right here. So I was a little weary of entering here, even though on any other day, that's exactly where I want to enter. If not here, definitely here on this retest of opening range high breakout. So I waited, right? But look what happens. I waited 5 minutes to just see the reaction. I didn't even need to wait 5 minutes. As soon as the report comes out, those major reports like that, you get a lot of action, right? Whether it's bullish or bearish. I just didn't want to start a position in a great spot and have this green candle be a red candle down here. Okay. So I waited and I missed this whole thing. So at this point, I need to try to see if I can identify a trend and then get in the trade later at another place. So this is a super important part of trading, guys. To take advantage of these trending days is to identify it early. Okay. So how do I do that? Well, the orb helps me a lot. Seeing a strong move outside of the orb that's respected in continuation, that's usually going to establish an early trend in the day. And you can see here's our high, lower high, higher high, right? Just all because of an opening range breakout. Now, Later in the day, and when I ended up getting in calls, was when we started to really retest for the first time the 9 EMA, okay? And the great thing about these EMAs is just like I was showing you on the daily chart with giving me a, something to look for intraday today, can SPY break over the 20 EMA on the daily, right? These EMAs will help you on the 5, 10, and on a really strong day, 15 even you can go down to. Stay in your trades and identify a trend and get an entry. So if you were somebody like me who was waiting for that JOLTS report to come out at 7 before they took a trade on SPY and you missed this awesome stick that was due to the JOLTS report being cool, then you got to try to find another place to get in, right? And you can see that as soon as we really test that 9 for the first time, we get buyers stepping in. There's a little bit of a fight here, but it holds it smooth. And you just get a really nice stick up. And so even though I didn't catch the whole trade and not, made as much money as I would have if I had played the opening range breakout like I like to, I'm able to watch for that first retest. Patience. I'm not chasing here. I'm not buying here. I'm not buying calls here at 445. I'm not buying calls here, right? I'm waiting for the first retest of the 9, okay? Now, there's another part of this chart that's super important, and why I said I'm not buying calls right here, right? This level 445.25 is our inside week high. SPY came into this week as an inside week, and you guys know I like inside bars, inside days. This is an inside week, so here's our last week. It's totally inside this candle, right? And anytime I see an inside week, not every single one that exists in the market, there's a lot of stocks, but SPY and stocks that I follow, I mark these. I have my own watch list for inside weeks. I mark the high and low of the week, and I look for either breakouts or range rejections, depending on my sentiment on the stock, right? So if I was really bearish on SPY, I might look to short this top of this range. If I'm bullish, I would either look to long off the top or see if we get confirmation of a breakout. So you can see that after we had our nice move up early in the day and we had the opening range breakout, we were right here testing our inside week breakout. And we had a couple candles fighting it, not able to get over it, and then boom, now you're over it. So this is why I wouldn't short here. I'm sorry. Well, I wouldn't short there because of the strength in the market, but I also wouldn't try to go long right here because there is a chance that you're going to get a rejection at this major level, but we bust through it. And then just see the EMA respect. Now, also, you can flip to the higher time frame, and usually on a strong day for the 5-minute EMA, the first time you lose it on the 5, the 10 is going to hold for you. So you can see that we finally lose the trend on the 9 EMA here on this candle close on the 5. But watch on the 10. We come in, bounce right off of it. So you could enter right here, 447.65, and get a nice dollar plus move. You could have missed this entire move. Maybe you were busy with work or something, or just slept in or whatever, and woke up and been like, man, SPY's ripping, but where do I get in? Well, you see that you've lost the 9 on the 5 once. Maybe let's try a 10 on its first test. The first time these things are tested on trend days, they almost always are going to give you at least a scalpable bounce, 50 cents, and this was a dollar plus move, right? So this is one way you can identify that it's going to be a trend day and also find a way to get in. Now, what are some other clues that you might be able to find? Imbalances that are left untested, right? Look at this candle here. This creates one imbalance, or fair value gap, however you want to call it. This creates an imbalance that is not tested, okay? When I'm on the 10-minute, you can even go on the 5 and see it a little better, right? So stick up there, and we just dip into it a little bit, but we don't fill it. and then we bounce. Now, this is all part of the opening range breakout too, which is a lot of the reason too that it was such a nice move. This stick, this creates an imbalance. So now you had this and this also. You're dipping in, but you can't fill it. These imbalances left unfilled, kind of like gaps. If you guys remember my daily gap video, anytime SPY gaps, whether it's up or down overnight, and those gaps aren't filled right away, that's usually a sign, if it's gaps up, signs of strength. If they're gaps down, signs of potential weakness, right? These are just intraday kind of versions of that. Another, you could even say this one is another one. And this one eventually gets pushed into a little bit again, but they're not filling. They're just barely dipping in and then bouncing. That is a sign of strength and trend continuation day, if you see that kind of stuff on these imbalances. So that's another way you can tell. And then you can also use our friend MarketNet Flow. Okay. Look at MarketNet Flow, guys. This is about 15 minutes into the day. It's already a huge start of a bullish divergence in net calls versus net puts. Puts are headed down, calls vertical, right? So just everything was pointing towards, okay, it's a bullish day, right? This is a strong day, potential big trend day. And then it's just all about getting your entries. So at that point, use your EMAs, all right? That's going to be your best chance, because if you're a fib trader like me, on a day like this, you're really never going to get enough of a pullback to ever get into a golden zone of a fib, unless you're drawing really tiny short legs on your fibs, right? And those can be a little more risky, but like a longer intraday fib, it never pulled back enough today to get in. So use those EMAs, check your different time frames, and try to get in on the first major test of one. That's going to give you the best result, just like right here. That best move. Later, the more times we test it, yeah, it bounced there. Third time, failed, right? So the more you test, the more likely it is going to eventually give in. So maybe flip to your, flip from the 5 to the 10, like when we lost the 5, flip to that 10 and try to get in on the 10, and that can work for you. Now, kind of going hand in hand with the idea of how do I identify the trend on days like this and still catch a good part of the move and make some money. What we don't want to do is try to snipe the top. Okay. You see it all the time on FinTwit. People are bragging about, oh, I sniped the top, I sniped the bottom, all this stuff. You're getting lucky most of the time when you do that, guys. There's no reason to fight trends and try to nail tops. And let me show you some examples, okay? We talked about our inside week. I bet there were some people that wanted to short that. Especially if they have a bearish bias, right? They're looking for any reason to take puts because they just want to go short. They're convinced this is a fake dead cat bounce or whatever. They've been convinced since October that SPY should not be where it is. Inside week, right? They're probably trying to buy. They see this big stick. Oh, we're going to reject up here. This imbalance is going to fill, whatever their motivation is. And we just blast right through it. Okay. And then we see tweezer top. I bet people tried to short this. And, you could have scalped it if you wanted to buy just off this candle. But once the tweezer tops form, you're entering here. What are you going to do? You're not getting much, right? You're just going to lose. And here's the thing. Why short when you haven't seen trend change? Like, there's no indication other than either your bias or just a plain level or some type of candlestick confirmation that is just egging you into getting into a short trade. That's not a high quality setup. That's not a high likelihood outcome, right? We haven't even tested the EMA. Like, yeah, I mean, tweezer tops are cool. Tweezer bottoms are cool, but we haven't even tested the EMA on the 5-minute yet. Why would you go short here? Okay. Same thing, inside weeks are great. I love them. Why would you go short off this candle right here with this strength and this volume just because it's the inside week top? I mean, It is a good level. Don't get me wrong. We also have 445 psych here, and it's a negative gamma and everything. But until you see some short sign of weakness that's actually meaningful, why would you go short here? All right. And we never really see it all day. We keep making higher highs and higher lows all day. Some people want to get in when they start to see the 9 EMA fail. And I get that. It fails here on the 5. But I'm going to wait till I see at least the 9 EMA on the 10 fail. Now, here is basically your first maybe chance if you're just itching to go short. We get a tiny close below the 9, but look at the wick and on volume. I mean, to me, that's like a crackhead entry, right? You're just foaming at the mouth, waiting to short. You just can't help yourself, right? You don't need to do this. Wait another 5 or 10 minutes just to be safe. If it did flush here, you're still probably going to likely get a retest of it after a trending move that lasted that long into the day. The likelihood that we get this little close with a wick below the 9 and just head all the way back down is so low, guys. So at least wait 5 or 10, and then you'd see this candle and be like, okay, we're back over the 9, and look, we held it the rest of the day, all right? So that's kind of like my SPY recap. There were a couple nice ops here. You know, if you weren't worried about jolts, then you had a really easy day. If you were worried about jolts, then you had to kind of wait for the trend to establish, like we discussed, and look for your entries on the EMAs or pulls to the other levels that you liked, okay? But let's talk about a couple other things, okay? AFRM. Now, this was posted on my Twitter for any of y'all watching that aren't in my room. This was my setup for the day on Twitter, and it was an inside bar after a peg. So power earnings gap, it had earnings this day, gapped up, huge, awesome candle with very little wick. And then yesterday it printed an inside bar, and just for the fact that it's a peg, it has relative strength. And then the second day, it's a red candle, but it's a green day, and it's a big hammer down around this 17 psych level. So these are my favorite, one of my favorite setups, a peg into an inside day. And these are one of the few setups that I will play right off the open with no confirmation for a breakout, okay? So here's our trigger, the inside bar high, previous day's high. We open, we start to go up. How do I play this? Soon as we poke over it, I'm in. And yeah, it's risky, and you can reject here and take a quick loss, but I'm prepared for that. I have my stop loss set. And I've seen how often any inside days break out when they open near their triggers, whether it's to the long side or short side. They follow through very high rate of success, especially if you're willing to scalp quick gains. And if you know that the stock has relative strength and it's breaking out to the upside, or relative weakness breaking out to the downside, that's even better, right? So I was in as soon as we poked over this level, slapped the calls, and my first target, as mentioned on the write-up on Twitter, was this 1850 positive gamma resistance, and we hit that right away within 5 minutes, and they were up like 30 or 40%, and I took off half right away. This is an off the open trade. You can't manage it with the exact patience that you do a trade that maybe you take later in the day when things aren't as volatile. If I get this pop, and this is a big scale target for me, I'm taking a bunch off. On a normal trade, maybe my first target I take a third off or a quarter off. I took a half off here, right? Now, what do you want to see the rest of this trade? Can we respect this 1850 and turn that resistance into support? We did. Lots of wicks up, right? Lots of wicks up. So I'm being cautious. I got a break-even stop set on the rest of my position. And after this third candle of the day, we're 15 minutes in. Here's our opening range set, huge opening range. At this point, I'm just looking for respect of this level and a breakout over this level. We get the opening range breakout here. Perfect retest and another leg up. So, you know, if you aren't somebody who wanted to play that off the open trade, I totally get it. It is risky. And we didn't get, you know, any type of good fib pullback. We didn't even get to the 50 here, as you can see. then what else can you do really with a strong name like this? Well, I would say look for an opening range breakout. It is riskier that it's already up so much on the day, but I mean, a really strong stock's going to respect it. And look at push through, retest, rip. My main target here was 1974, which is the local high on the daily you can see here. We didn't quite get there, and that's okay. It's going to be on watch the rest of the week because this is a strong name, a peg. I keep those pegs on watch for weeks after they happen. Have my own watch list just for them, just like I have for the inside weeks. So that's a firm. And then lastly, I want to talk about Apple because I posted about this on Twitter as well. Market leader today, tech very strong, growth names very strong. I took this kind of risky trade at the end of the day based on a couple different things. One, we were headed up to 185 on Apple, which is a huge spot you can see on the daily, and getting in through this volume gap and coming up to a shelf here, working its way through a couple different imbalances on the daily and all that, with the big GEX level as well. And we were coming into the end of the day, and what I noticed was on TradyTix, back on TradyTix, all the call buying, right? We talked about market net flow today, so much call buying. We also know that now over 50% of all options that are bought on SPX are 0 DTE expirations. I thought that there was a chance, as you can see here, how many calls are being bought versus how many puts are being bought. The dealers might have to de-hedge, and the market could get a little bit of a pullback off the end of the day, whether it's like the last hour, last 30 minutes. Sometimes it's more like the last 30 minutes. And it was just kind of lining up that, Apple was grinding up all day, getting to this major 185 spot right before close. And I was looking to get in somewhere up here, right around a tap of 185 to get short. And as soon as we got it, we got 10 cents away. Boom, two really nice sticks down on Apple, 40% on those puts to end the day. It was a really nice move. I was on the 10-minute chart when I was playing it, and I sold most of mine at the 20 EMA because we had not touched that all day. So they went a little bit farther, but I got a nice 40% there. So that's another, and all these things that I've talked about, guys, there's other videos back on my YouTube. So if you're a new subscriber or new follower, go back. I have videos on opening range breaks, on inside day breakout trades, on market net flow, on identifying the trend, on the dealer's diary. That's what I just showed you here. That kind of can give you a hint of when maybe dealers have to de-hedge, whether it's because of heavy call flow or heavy put flow, right? I have videos on all those. So if you have questions, follow-ups on this video, just leave a comment or find me on Twitter, send me a DM, and I'll help you out.